So activity 88 shows us step 7, how to prepare financial statements. Very simple. We're preparing an income statement and a balance sheet. We'll also prepare the statement of stockholders' equity and a statement of cash flows. And all the information we need to do this, almost all of it, is right here on our adjusted trial balance that we just figured. Because we have all of our balance sheet accounts right here. These are the balance sheet accounts, and these are the income statement accounts. And here are your stockholders' equity accounts. So we have the information that we need to prepare the financial statements right on our adjusted trial balance. Therefore, what I'm going to do here is, let me split my screen. Here's the adjusted trial balance on top. And here, on the bottom, is the income statement. So I'm always going to prepare financial statements in this order. ISB, income statement, stockholders' equity statement, and balance sheet. In that order, ISB, income statement, stockholders' equity statement, and then balance sheet. And you'll see how they're related to each other. We've spoken about this before. So for the income statement, I'm going to go down here to my income statement accounts, which are the 400 and 500 series accounts. Revenues, we said, was $20,000. Wage expense, I don't know why it says $2,000. Oh, yeah, because wage expense is $2,000. That'd be a good reason. Rent expense is $0. No, rent expense, sorry, I'm thinking of the other area. Rent expense is $1,500 right here. This is from the trial balance. All I'm doing is copying the numbers directly from the trial balance. Supply expense was $700. Gesundheit. Depreciation expense is $300. So copy it right here. And insurance expense was $200. You remember calculating all these amounts and entering them as entries. And therefore, my total operating expense, $2,000 plus $1,500 plus $700 is $3,200, $3,500. I'm sorry, $4,500, $4,700. Total operating expenses is $4,700. Revenues minus operating expenses. Revenues of $20,000 minus operating expenses of $4,700 would give you net income of $15,300. That's how you calculate it. Next, I'm going to do my statement of stockholders' equity. Oops. Didn't mean to do that. Wait a second here. Let's just tuck this out of the way for a moment. I had stock issued of 30,000, if you remember. So that would increase total stockholders' equity by 30,000. These are the two types of accounts we have. We have common stock and retained earnings. We've simplified things, so we don't have like additional paid-in capital, these other things, and then a total stockholders' equity column. So here you see stock issued was 30,000, and that would increase total stockholders' equity also by 30,000. Net income comes from here on the income statement, and that gets added to retained earnings because retained earnings equals beginning retained earnings plus net income minus dividends equals ending retained earnings. I'm going to make this yellow so you can see how the two numbers are linked. That's where I got this number from. And then I've got my dividends up here on my adjusted trial balance of 400. So dividends are going to be subtracted from retained earnings. And again, I've got to write in my totals. This would increase total stockholders' equity. The income increases total stockholders' equity by $15,300, and the dividends decrease stockholders' equity by $400. And then the balance of common stock is $30,000. And the balance of retained earnings at the year end is going to be $14,900. That's zero, beginning balance, plus net income of $15,300 minus retained earnings of $400 minus dividends of $400 gives me an ending balance of $14,900, and those two add up naturally to $44,900. Questions? Next, we go to the balance sheet. The balance sheet, most of the information, the assets and liabilities are all going to come from the adjusted trial balance, but the stockholders' equity section is going to come from the statement of stockholders' equity. So watch what we do here. Let's go to the top of the adjusted trial balance, because this is where all the information we need is. Cash is $25,700. That comes from here. Supply inventory was $500. Equipment was $18,000 less accumulated depreciation. This is how it's presented, of $300. So therefore, the net equipment would be $17,700. See what I got to do? I got to offset them because accumulated depreciation, remember, is a contra asset. By the way, I'm just going to color this so again you can see. Oh, you know what? You already know that this is coming from the trial balance. This here, $17,700 is a total. Prepaid insurance is $2,200. So therefore, total assets would work out to be $46,100. Just adding together this column. So really, I'm adding together this column, and this is sort of like a sub calculation, you know, like a subtotal that's going to add up, that's going to be thrown in there also. Accounts payable also comes from the adjusted trial balance. It's right over there, $1,200. Now, common stock and retained earnings isn't going to come from the adjusted trial balance, but instead it's going to come from the statement of stockholders' equity. So we said total common stock and retained earnings, respectively, were $30,000 and $14,900. I'm going to carry those amounts into my balance sheet, just like so. So common stock is $30,000 coming from my statement of stockholders' equity, and retained earnings is $14,900, again coming from my statement of retained earnings. And I'm coloring that orange so you can see that the orange over here on the statement of stockholders' equity goes right to the balance sheet. And that also adds up to $46,100. So total assets equals total liabilities plus total stockholders' equity. And obviously this statement here is a little bit abbreviated. For the statement of cash flows, I'm using the direct method. And for the statement of cash flows, you should know where all this information is by looking at your general ledger. So if you remember the general ledger, let me split this again. Here we go. Down below you can see the cash balance right over there. So you can see and remember all the different cash transactions. We received $20,000 from customers right there. I paid insurance, if you remember, of $2,400. I paid rent of $1,500. And I paid wages of $18,000. No, what did I pay for wages? Did I miss up? I didn't pay anything for wages, did I?
Wage expense for 2000.
But why isn't it in cash? By the way, if I got it wrong, it's your fault, because you didn't catch my mistake. That was a joke, right? Don't take it. Students sometimes they'll be like, all right, whatever. Oh, I see. It was part of this $3,500 payment. But I don't see the $3,500 payment from transaction 7. I wrote $1,500 here. We got to check the math then. Because of that $3,500, $1,500 was rent, and $2,000 was wages. And let's just check the math. Did I just write the form? Did I just write the answer in without actually double checking it? And you guys weren't double checking it either. Let's see. 50,000. In that case, we all lose a point. 18,000.
No, but you had, that was also with rent expense and employee wages for 3,500.
Yeah, so originally I wrote 1,500 over here. I posted it wrong. The journal entry was a credit for to cash at 3,500. I posted it wrong. And then I put the answer in here of 25,700. I think it was given in the problem. Yeah. It was given in the problem, but I wrote the wrong number in. All right, so that was my mistake. But anyway, that's 1,500 I paid in rent, and 2,000 I paid in wages. Now, cash used to purchase equipment. How much did I spend on equipment? 18,000. That's this number right here. And I had cash from issuing common stock. That's 30,000. And you would have there's actually a more sophisticated approach to doing this. But if I showed it to you, it would take like an hour and a half to show it. I don't know why I don't seem to be able to do this, but I'm going to have to give up on the colors, I guess. But that's 30,000, and this 400 was the dividends paid. So therefore, net cash from financing activities would be net inflow of 29,600. And if you add 14,100, and I will add it because I shouldn't take for granted that it just adds, plus 14,100 minus 18,000 plus 29,600 does not come to 25,700. Try it again. 14,100 minus 18,000 plus 29,600 comes to 25,700. Okay, it does work. And then my beginning balance was 0. Therefore, my ending balance would be 25,700. And that would be your statement of cash flows. And these are financial statements. So our basic job of taking the list of transactions and transforming them into financial statements is done. That is the basic job, and that is most of the accounting cycle here. When we talk about the accounting cycle, let's look where we are. We just did steps 4, 5, and 6. Then we prepared the financial statement, step 7. The last steps are going to be the closing entries, which we're going to deal with in a moment.